Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're exploring the Bollinger Bands CCI strategy, which is a combination designed to refine your entries and exits in the Forex market. You will learn how these two indicators work together to identify trends and reversals with precision. Stay tuned until the end to uncover a step-by-step trading plan and avoid common mistakes that could impact your trades. So without wasting any much of your time, let's get started. What are Bollinger Bands and CCI? Bollinger Bands and the Commodity Channel Index (CCI) are two technical indicators that work well together to help you understand price movements and market trends. You can see them on the screen. This is the Bollinger Bands and this is the CCI. Alright. The Bollinger Band consists of three lines: a middle line, which is the simple moving average SMA, and two outer bands that are set a specific number of standard deviations away from the SMA. These bands expand and contract based on market volatility, providing a visual range where prices typically move. So when prices move outside these bands, it can signal potential overbought or oversold conditions. The CCI is an oscillator that measures how far the current price is from its average over a given period. It helps identify overbought and oversold conditions by using a scale where values above 100 suggest strong upward momentum, while values below 100 indicate strong downward momentum. So this is the settings. The period is always 20 period, and the SMA period is 14. For the style, this is how you set it up: the 100 and below 100, just like I explained. So unlike Bollinger Bands, which focus on price levels, the CCI focuses on momentum, and this makes it a great complementary tool. So when combined, these indicators offer a clearer picture of market conditions. For instance, if the price touches the lower Bollinger Band and the CCI drops below 100, it could indicate an oversold market with potential for reversal. Similarly, when the price reaches the upper band and the CCI rises above 100, it might signal an overbought market. So we'll get into details when we are talking about the strategy. So ensure you watch until the end of this video to learn and get the full package. You can use these tools together to filter out false signals also and confirm trade opportunities. This combination is particularly useful in identifying reversals or breakouts when used with proper risk management. So let's quickly talk about the strategy. How can you use these two indicators to trade in the market? To use the Bollinger Band CCI strategy effectively, start by setting up your chart. Use the 15 minutes time frame or above or higher for better accuracy. I'm currently on the 15 minutes time frame, and the first step is to add the Bollinger Bands with a 20 period setting and a standard deviation of 2. Then include the CCI indicator with a 50 period setting. Alright, I'll change this to the 50 period setting, and here we go. Also, I'll change this to, let me quickly look. Okay, the Bollinger Bands is in the 20 period setting and the standard deviation is 2, just like I said. And then for the CCI, your period should be 50 period settings. Now that you've adjusted that, if you want to filter trades further, you can add a 150 period simple moving average to identify the overall trade direction. Alright, let's just quickly focus on these two indicators. So for a buy setup, first ensure that price is above the 150 SMA. So I'm just gonna quickly add that to help us gauge the trends, the market trends. I'm just gonna add a simple moving average to this, and this will be 150 period moving average, and I'm gonna have it in a red color or a green color. Okay, and it will be thicker. All right, you can see the moving average on the chart, and this helps tells us like the trend, the current trend in the market. If price is below the moving average, we're in a downtrend. If it's above it, then we are in an uptrend. So for a buy setup, first ensure that the price is above the 150 simple moving average, indicating an uptrend, just like I said. Next, watch for candles closing below the lower Bollinger Band. This suggests that the market may be oversold, and you can confirm the signal by checking if the CCI is below 100. Once both conditions are met, enter a long position when the price starts to move back toward the middle Bollinger Band. So I'm quickly going to look for an example of a buy setup so that we can use it to trade, and we have one right here. This is very clear. So remember, the first setup is to ensure that price is above the 150 simple moving average, just like we've seen. And the next step is to watch for candles closing below the Bollinger Band. You can see several candles closing below the Bollinger Band here, below the lower band. You see this red candle, the green candle, the red candle, and these four candles all closed below the lower band. And also, you can also confirm with the CCI. The CCI is below 100. Remember, this channel that I marked out here is the 100. Above this channel is above 100. Below this channel is below 100. So you can see this is a perfect example of a buy setup, and we can look to take our buy position from here. You can see this also coincides with price using the moving average as a dynamic support level. You can see price reacting from the moving average from there also. So we could just look to take our buy position from here. As we had these consecutive green candles from that area, we could just look to place our buy position here, and our stop loss below this swing low, and we could set our take profits all the way high to 1:2 risk to reward ratio, or a 1:3 risk to reward ratio. And that's how I would have been able to capitalize on this trade and take profit right at 1:2.38. And this is a wonderful trade using the Bollinger Bands CCI strategy. And let's look for a sell trade setup so that we can explain this further. We've seen an example for the buy. Let's look for example for the sell setup so that you understand. You can see price is below the 150 simple moving average, which shows that we are in a bearish trend here. So we're just looking for a situation where all our criteria are met. You can see here price is closing above the Bollinger Bands, and we are supposed to see an overbought condition at the same time, but the CCI does not give us that confirmation, so we can't take a sell trade at this point. You can see the volatility here is kind of crazy. So let's keep looking, and here we can see one. You can see this one. Price is below the 150 simple moving average, and price just closed above the upper band just a bit right there. And here we have the CCI being above 100 right here, signaling an overbought condition, and we should be looking to sell. So look at this. Could place our sell trade right here, and our stop loss just above the high. Take profits at 1:2 risk to reward ratio, and that's how I would have been able to take this sell trade using the Bollinger Bands CCI strategy. It's very, very straightforward. The first step is to ensure that we are in an uptrend or a downtrend depending on the market context at the same time, using the 150 simple moving average. And the next step is to look for candle closing below or above the Bollinger Bands, the upper and lower Bollinger Bands. And the next step is to confirm the signal, the buy or sell signal, using the CCI. If the CCI is above 100, then it means that we are overbought. If we are below 100, we are oversold. And when you use this accordingly, you'll be able to take trades like a pro using the Bollinger Bands CCI strategy. So, alright traders, we've come to the end of today's video. If you found this video helpful, please hit the like button, subscribe to the channel. We want to hear about your comments, so engage with us in the comments below. And thanks for watching, and I'll see you in the next video.